Okie dokie. Good day, everybody. This is James of MarketsAware, bringing you your daily insight on the 2nd of August 2016 with love and care, as always, from MarketsAware. Today, we're having a quick look at a certain commodity, a certain yellow metal, which is, of course, gold, which is shining quite bright at the moment. Carrying on, to really recap what's happening this week, I've already mentioned in detail what we've got coming up, but just have a quick rehash of what we can expect. 3rd of August, of course, I mentioned we had the ADP employment change at 12:15 GMT. Expectation is for it to be lower than previous, 168,000, as opposed from 172,000 previously. Again, I said it's medium, but we need to keep an eye, obviously, dollar versus the majors and gold, which we'll talk about more in a little bit. Then, again on the 3rd of August at 11 a.m. GMT, it's a big one. We have the Bank of England base rate decision, where they're actually expectation of reducing rates to 0.25%, down from 0.50%. Again, this is a very high importance. So we have to keep a very close eye on this, and I'll talk a little bit more about that in a second. Of course, obviously the cable, euro sterling, but I would also say keep an eye on gold, because gold, again, is a safe haven. About 30 minutes after that, at 11:30 a.m., we have Carnage Carney speaking, and we know what he does when he speaks. He causes carnage. No, I'm joking. He can cause volatility when he speaks. So we need to keep an eye on what he says, outlook for the market, etc. Again, cable, euro sterling, gold, but also keep an eye on the FTSE, because of course he'll be talking about future growth, development, and the impact of the BRIC exit on the UK economy. So keep an eye on the FTSE too. Then, of course, Friday, August the 5th, it's the NFP. 12:30 p.m. GMT, expectations 175,000. High importance, we already know this. So keep an eye on the dollars, the majors, gold, and the dollar index. At the same time, of course, we have the US unemployment rate, supposed to stay the same, but let's have a look. Again, keep an eye on this, but really it's the NFP which is going to be taking center stage on Friday. So let's have a little look at gold. Okay, now gold is actually traded near a 3-week high early in the Tuesday morning session. The fact that the market doesn't expect a US rate hike in the near future is actually supporting the yellow metal. The weaker US GDP, which was released last week, is also encouraging buyers into the market, along with the general concern of the global economy in general, China's slowdown, BRIC exit, etc., etc. And as always, the NFP is the key indicator for the week for the yellow metal, but keep an eye on the Bank of England rate decision and conference, because like I say, this is really going to be, it was only last year or 2 years ago, they were talking about the Bank of England raising rates. It's now obviously a complete reverse. So really we need to keep an eye on that, because we could see a lot of fear and more of an influx into obviously the safe haven, which is gold. So we need to keep an eye on the Bank of England tomorrow as well. And just on a side note, there is continued labour disputes in South Africa, which is the second largest supplier of gold. Talking about obviously the second largest supplier, let's talk a little bit about the first largest supplier of gold, which is, of course, is Australia. And today we had the Royal Bank of Australia release its actually base rate decision, and this is obviously the Aussie on a daily. And in fact, the Royal Bank of Australia did in fact cut rates to 1.5%. However, apart from the initial drop on that announcement, the Aussie did indeed recover. And as we can see, according to the Bolly on a daily, it's actually sort of challenging a potential resistance at 0.76351. And according to the Bolly, there is a potential support at 0.75. Start that again, 0.75356. Now, interesting enough, just so you know, the Aussie dollar and gold is actually quite correlated, actually are very much linked, because like I say, Australia is the biggest supplier of gold. So what you can sometimes tends to see, and this could actually explain the reason why we had a good recovery in the Aussie dollar today, is that if gold prices tend to sort of go up, the Aussie dollar can sometimes follow, because obviously it's a supplier. Higher gold prices will strengthen the Aussie dollar. So that's an interesting pattern to keep an eye on. It's an interesting partnership they have. So keep a close eye on that there. course, we need to have a quick chat about the cable. Obviously, big day tomorrow. This is the cable on a 4-hour chart. It's a little bit of short-term noise here, the build-up with the Bank of England, of course. As we can see, it's actually above on a 4-hour, the simple moving average there. Sort of saying we're still on a sort of a, acting as a support at 1.31679. Again, this is short term. It's actually showing a volley on the 4 hours as well, showing a potential resistance at 1.32754, which is currently being tested. So this is interesting to watch, certainly with the build up the Bank of England occurring tomorrow. If we move on and have a look at on a monthly chart, not an awful lot of change from yesterday's levels. We are still very much under the standard moving average. Sorry, simple moving average there on the long term. So it actually is illustrating still on a downtrend. The volley showing potential resistance of 1.33922. Then the potential support according to the volley at 1.31453. It's really over to Carney and the Bank of England base rate decision tomorrow. And again, it's likely to really down to see how the market sees if they do cut rates. Is it a positive or a negative to see how this currency pair pans out? So all over to you, Mr. Carnage. And finally, let's move on to what we are talking about, the metal of the moment, which is, of course, gold. Now, this is on a daily chart. The volley is showing a current resistance at 1.372.06, or shall I say $1,372.06, and a potential minor support at $1,340.06 as well. Still very much on an uptrend. Again, we'll say we're above the simple moving average support of $1,297.64. So really build up to Friday, and obviously, like I say, Bank of England, we need to watch tomorrow. So let's keep an eye and see how this pans out. And of course, I want to bring us back to the attention of what I mentioned briefly yesterday, which is gold on a monthly. Now, we are approaching some very interesting levels. Okay, according to the Fibonacci retracement, we're approaching some key potential resistance levels. The first one is $1,380.26, which is 38% on the Fibonacci retracement. This was last tested back in July 2013. So again, this is becoming quite a key level to keep an eye on. If we have a poor NFP, if this sentiment continues, if obviously the Bank of England, how the market reacts to a negative response to Bank of England, and we carry on with obviously the insecurity in the safe haven aspect of gold, if we could see a clear break of that $1,380.26 level, we could, and I repeat, we could see the next potential Fibonacci retracement level is at $1,483. I said that again, $1,483.46, which is the 50% on the Fibonacci retracement, actually next level coming into play. But to be fair, guys, like I say, this is coming up to test levels not tested in the last 2 years, so 3 years even, shall I say. So we need to keep a close eye actually how this pans out and how the market reacts over the next day or so. And as I always say, that is a wrap for now. Remember, this is no way whatsoever to be seen as advice. It's purely for informative purposes only. Again, special thanks to NetDania for your fantastic charts. I love you. This is James from MarketsAware. You trade safe.